The date is November 24th, 2015, and a man named Joe Campbell just woke up to discover that he has lost $106,000 trading on a company called Kalos Bios Pharmaceuticals, an overnight loss of more than most people make in a year. The stock market is full of stories, some of legendary success, others of brutal, unforgiving failure. Joe Campbell wasn't a reckless gambler. He wasn't throwing money at meme stocks or chasing hype. He was calculated, careful, a trader who believed he had found a sure thing. In November of 2015, he placed a bet, a short position against a struggling biotech company called Kalos Bios Pharmaceuticals, a company on the verge of collapse, a company that, by all logical measures, should have gone to zero. But in the stock market, logic doesn't always win. What happened next would become one of the most infamous short-selling disasters in retail trading history. A single trade, a single night, a loss so staggering, so devastating, that it became a cautionary tale for traders around the world. This is the story of how Joe Campbell lost $106,000 in a matter of minutes. To understand how this happened, you have to understand short selling. Unlike a normal trade, where you buy a stock, hoping the price goes up, short selling is the exact opposite. A trader borrows shares from a broker, sells them at today's price, and waits. If the stock falls, they buy them back cheaper, return the shares, and keep the difference as profit. It's a strategy built on decline, a bet that a stock will fall, not rise. And Kalos Bios Pharmaceuticals? It seemed like the perfect target. The company was in financial distress. It had been warned about delisting. Its stock price had been in a slow, painful decline for months. For Joe, it wasn't even a question. The company had no money, no future, no way out. So he placed his trade, a short position, a bet that KBIO would continue its downward spiral. And then he went to sleep, confident, certain, secure in the belief that he had made the right move. But while Joe was asleep, something happened. In the late hours of the night, a shocking piece of news broke. Here's where the story takes a wild turn. Enter Martin Shkreli, the infamous pharma bro. Shkreli had just made the headlines for raising the price of a life-saving drug called Daraprim, an anti-parasitic drug, by 5,000%. Overnight, the price skyrocketed from $13.50 to $750 per pill. But while everyone else was busy hating him, Shkreli was quietly buying up shares of Kalos Bios.
Imagine for a moment popping a pill before bed that costs about $13.50. Now imagine waking up the next morning to find that the price of the exact same pill jumped to $750 overnight.
Overnight, the company had transformed. It was no longer a dying biotech firm. It was now controlled by one of the most aggressive, unpredictable investors in the industry. And Wall Street took notice. At the opening bell, Kalos Bios did something no one expected. It didn't collapse. It didn't sink. It exploded. Traders rushed in, desperate to buy shares. The stock shot up, fast. $2, $5, $10, $15. For short sellers like Joe Campbell, this wasn't just a bad trade. This was a nightmare. A short squeeze was unfolding. A short squeeze happens when too many traders are betting against a stock. If the price rises instead of falling, they are forced to buy back shares at higher and higher prices, just to cover their losses. It's a vicious cycle. As the stock surges, short sellers scramble to escape, but their own desperation only pushes the price even higher. And Joe was trapped. He had bet against a company that should have failed. Instead, it was going vertical, and his losses were multiplying by the second. This video's sponsor is Dude Division, the perfect destination for those who refuse to blend in. Whether you're built for the grind, forged in fire, or just looking to wear something that actually means something, these designs speak louder than words. Visit dudedivision.com today and use code LOSTCHRONICLES for 15% off your first order. Stand tall, stay relentless. Now let's get back to the story. In trading, there's something called a margin call. When a trader borrows money to make a trade, they have to keep a minimum balance in their account. If their position moves against them too much, their broker steps in and forces them to cover the trade automatically at any price. And that's exactly what happened to Joe. As Carlos Bios soared, his brokerage account sank. The numbers turned red, then deeper red, then flashing. Margin call activated. His broker started closing his trade at the worst possible moment. $20, $25, $30. With every tick upward, Joe's debt grew. His account balance plummeted below zero. By the time the dust settled, it was over. Joe Campbell's trading account was not just empty. It was negative $106,445.56. A six-figure loss, gone in minutes, and there was nothing he could do to stop it. Joe's story spread like wildfire. Within hours, his devastating loss had been shared across trading forums, social media, and financial news networks. On Reddit, he posted a single thread. "I just lost $106,000 overnight. Ask me anything." The reactions poured in. Some traders sympathized, others mocked him. Some offered advice, others used his story as a warning, a brutal reminder that in the stock market, risk is never truly under control. Even Martin Shkreli himself responded, laughing at the chaos his buyout had caused. Joe, for his part, could only reflect. One decision, one trade, and in one short moment, everything was gone. Joe Campbell's mistake wasn't arrogance, it wasn't greed, it was trust. He trusted that Carlos Bios was doomed. He trusted that short selling was safe. He trusted that he couldn't lose more than he invested. But the market is unforgiving. A stock can only fall to zero, but it can rise forever. And when that happens, losses have no limit. That is the true risk of short selling. Joe Campbell's story remains one of the most infamous trading disasters in modern history, a brutal lesson in the power of short squeezes, the dangers of leverage, and the unpredictable nature of the stock market. Because in the end, the market doesn't care what should happen. It only cares about what does. Trade wisely. Well, that's the end of the story, but let us know in the comments what you think. And if you enjoyed the video, don't forget to give the video a like and subscribe for more wild stories.